Today, Bitcoin holds its ground above the $52,000 level. Genesis gets court approval to sell more than $1 billion in Grayscale Crypto Trust shares. And PitchBook's Robert Lay breaks down the company's Q4 crypto report, which saw a surprising turnaround in VC interest. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Bitcoin is in the green again, trading above the $52,000 mark after crossing that level for the first time in 2 years yesterday. By noon Eastern, it had gained another 1.25%. Ether also gaining ground, rising more than 3.25% and trading above $2,800 for the first time since May of 2022. Solana, meanwhile, fell by about 1% to $114. Now, going back to Bitcoin for just a second, yesterday, the value of all the Bitcoin in circulation, or market cap, rose above $1 trillion for the first time since late 2021, as growing success of spot Bitcoin ETFs turned investor sentiment more positive. That's according to CoinMarketCap data. Now, the price rise continues a rally that began in January last year. This year alone, Bitcoin is up more than 22%. Okay, let's talk about the top stories. Genesis got the green light to sell about $1.6 billion in Grayscale Crypto Trust shares to repay creditors. That's according to Reuters, which reported that yesterday, a bankruptcy judge permitted the firm to monetize its shares of Grayscale Bitcoin Trust, Grayscale Ethereum Trust, and Grayscale Ethereum Classic Trust. Reuters reports the judge overruled an objection from Genesis' parent company, Digital Currency Group, which had warned that the sale might be premature if Genesis doesn't win court approval of its overall bankruptcy plan. Reuters added that Genesis holds about 35 million shares in the Bitcoin Trust, worth nearly $1.4 billion, and Ethereum Trust shares worth more than $200 million. Genesis has been moving ahead with a liquidation plan that would repay customers in cash or crypto. Earlier this month, the crypto lender reached settlements with the SEC and the New York Attorney General's office. In their separate settlements, both agencies said Genesis should prioritize customer repayments. Next, it is CNBC exclusive. Robinhood CEO Vlad Tenev discussed the trading platform's crypto business. Yesterday, we told you Robinhood raked in $43 million in crypto revenue and saw monthly active users expand. After reporting fourth quarter earnings yesterday, Robinhood got a boost, but that retreated by midday today. Speaking with CNBC's Kate Rooney, Tenev said that Robinhood's crypto business is important and that Robinhood is a major player in the crypto market, adding that its crypto component accounts for about 10% of the firm's overall revenue mix.
What we focus on is there's periods of price appreciation in crypto, bull runs and kind of winters. And in the bull runs, you tend to see a lot of retail engagement and excitement, and volumes can tend to increase quite dramatically. But in other periods, we've continued to invest. We're continuing to add functionality. We're expanding in the EU as well. And there, we've been tracking our market share. And if our market share continues to increase during the winters, then I think that positions the company very well to capture the lion's share of the activity during the bull runs.
Another company we're following is Coinbase. The crypto exchange is set to report earnings after the bell today, and we'll bring you the highlights in tomorrow's show. Last, Chainalysis released its annual report on crypto money laundering today, revealing that illicit crypto activity declined significantly in 2023. Two reasons why: lower trading volume and sophisticated crypto criminals like the North Korean hacking group Lazarus are developing new tactics in an effort to evade detection. The blockchain analytics firm said that more than $22 billion was laundered using crypto last year. That's a drop from $31.5 billion in 2022. Now, the firm wrote that the changes in money laundering strategy they've seen from crypto criminals serve as an important reminder that the most sophisticated illicit actors are always adapting their money laundering strategy and exploiting new kinds of crypto services. They encouraged law enforcement and compliance teams to study these new methods and become familiar with the on-chain patterns associated with them. All right, sticking with crypto reports for our main story. Data firm PitchBook's out with its crypto report for the last quarter of 2023, showing a surprising turnaround for VC funding in the industry. Crypto World's Jordan Smith spoke with Robert Lay, a crypto analyst at the firm, to have him break down the findings and what projects he expects to get the most attention in 2024.
So PitchBook is out with its latest quarterly crypto report, and this time you're looking at Q4 of 2023, and you're capping off a real year of recovery for the crypto market. Let's start with this data on VC funding in the industry, because it is a bright spot. PitchBook found that funding actually ticked up last quarter after 6 quarters of declines. Let's talk about that turnaround and where you think that's coming from, especially as crypto is competing for funding dollars with things like AI right now.
Yeah, so definitely we saw, like you mentioned, Jordan, there's a positive increase in quarter-over-quarter investments in Q4. It's the first time we've seen an increase since the beginning of 2022. $1.9 billion was invested across 326 deals. You know, the sentiment on the ground was that it has kind of turned last summer. And for us, you know, sentiment is really a leading indicator. So we really didn't see that capture into the data until towards the end of last year. But, you know, we speak to investors and founders and, you know, investors who are more open to speaking to projects and writing checks, and founders were having an easier time getting meetings with investors and being able to connect and talk to investors. So we really saw that capture in the data in Q4 where there's an uptick. The little caveat is that the deal count is still down. So even though the total capital invested was up, deal count was down. So what this means is that we're seeing overall check sizes are larger for the quarter, which means you're starting to see a concentration of capital within really like the strongest projects out there. So, you know, in the last bull market run, we see anyone with a white paper or some forked project was able to raise capital. That's just not going to happen anymore in this new cycle. And so you're really seeing the ones that are building core infrastructure or applications that are getting real traction. Those are the ones that you're seeing in investments, and you see that happen in the quarter.
Now, you mentioned in the report that a lot of those investments are focused on centralized finance. Why has centralized market makers become such a focus for crypto last year? And is the infrastructure focus that we're seeing really a symptom of the industry maturing? Or is this more about institutions becoming more and more important to the ecosystem?
I think there's a combination of both. I think the convergence right now at the right time is that the infrastructure is starting to mature. When we talk about infrastructure, it's everywhere from, you know, the underlying layer 1 blockchains to the scaling solutions to interoperability layers to centralized market makers, which we written in the report. These are all key components of building a really fast scaled blockchain ecosystem that can, you know, bring on billions of users. And so at the same time, institutions are interested in this space, and a lot of them have been building their infrastructure themselves, or they partner with external providers to you know, bring some of that infrastructure to them. And, you know, the convergence is that the infrastructure is maturing while institutions are coming in. So I think all of that, you're starting to see this sentiment have changed, you know, like I mentioned earlier. So that's why you're starting to see more investments in this space.
Let's also talk about innovation outside of just the infrastructure startups. You know, so much of the last cycle was about layer 2s. It was about the promise of smart contracts and dApps. Where are those projects now? Are they just gone when you're talking about closing out 2023? Are they largely on the back burner? Where do the ideas like that stand right now?
Yeah, so I think once we get to a place where we're not using these crypto jargon, you know, talking about smart contracts, users don't care. Even institutions don't really care, okay? So what is the specific use case for this technology? You know, we've talked about, you know, stable coins and cross-border transfers is a great use case, right? Even today, if you want to go through the traditional route of sending money abroad, if I wanted to send money to Vietnam today, it's still pretty difficult, even with fintech companies like Wise out there that makes it a little bit easier, but still costly, still takes a lot of time. Those things, I can't send it on a Saturday night if I wanted to, because those things don't run. Those things will still run on old banking rails, which close during the weekend. So we know that the technology is valuable, but what is the specific use case? And, you know, cross-border transfer is one of them. And so that is what we're talking about. We want to talk about how users are using it and how they're getting into the ecosystem. We don't really care about what smart contracts. They don't care what smart contracts are. They don't care what, you know, decentralized applications are.
Well, if we talk about looking ahead, I mean, you mentioned in this report the idea of Bitcoin layer 2s being a real focus going forward. Where do those fit into that idea that, you know, we have, we want to make things easier for consumers or for retail investors or for whomever, we want to sort of remove some of that jargon, but at the same time, you really want to add to this idea that Bitcoin can be more useful. It can go beyond just an asset to invest in. Where do you see that going?
Yeah, so Bitcoin is an interesting one because we've been hearing a lot, about Bitcoin, especially, this year with the approval of the spot Bitcoin ETF. So what that means is we have, traditional asset managers in the space who are able to buy and hold Bitcoin directly for their clients, which means you're going to start seeing a lot of liquidity move into the Bitcoin space. And at the same time, you're seeing a lot of research teams discovering ways to scale Bitcoin. And really, you're seeing Bitcoin shift from a traditional digital store of value only to more of a computing platform. And what that means is you're able to build applications on Bitcoin, which historically you're not able to do. So this is going to be very similar to how we see Ethereum. You have all these layer twos, all these applications that were being built on Ethereum, and now you're starting to see that come to Bitcoin. And it really starts with the fundamental infrastructure of the L2 scaling solutions, because Bitcoin itself cannot have smart contracts or cannot have programmability built in, just how the technical architecture is built. But these L2 solutions can enable that. So you can have NFTs and DeFi and stable coins and gaming all on Bitcoin. And you're starting to see that happen.
What are your expectations for companies going public this year? We had Circle filing confidentially to go public. Should we expect more crypto companies to legitimize themselves by going public? Is that even a focus right now? What are your expectations there?
Yeah, it's a timely question, Jordan, because we actually are just starting research on just showcasing who we think are the top IPO candidates in our specific vertical. So this is my team. And so I'm starting to think about crypto. Obviously, we know Circle is the prime candidate right now. They confidentially filed a few weeks ago. So, Ripple might be one. We've heard Brad talk about maybe IPOing in a different jurisdiction outside of the US because how the SEC is unfriendly to them here. So, but we have more to share with you once we publish that report.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.